Hey guys, Mubarak here. Hope you're doing well. Today in this video, I want to run you through how I look at any ICO, any cryptocurrency, and how I run my analysis. Okay, I came up with this concept based off of the really popular series that I created called How to Research a Stock in 5 Minutes back in penny stock days. And so I want to do the same thing with the cryptocurrency market because I want to show you guys the important stuff, what's not important, and really how you can come to a good conclusion without losing hours and hours and hours. Okay, as we can see here, there's 1,523 cryptocurrencies at the moment, and this number is going to increase on a daily basis. There's a lot of money to be made in cryptocurrency, and I want to show you guys how to do the right analysis so that you can catch these big guys. All right, right here, Blocknet. Now, I wouldn't have traded this because of the volume. Again, I want at least 50 million to 100 million plus in volume before I'm going to look to invest. But if you use my strategies, you could have caught in on the high of Nano. Actually, I talked about Nano at Invest HQ a couple of days ago, and you can see that it's been rising several days in a row. If we look at the chart, we can see that, just 7 days ago, it was $8, and now it's doubled in price. So you would have doubled your money had you just followed Nano, right? And again, this isn't investment advice. This is just educational advice, how to look at cryptocurrencies, how to know which altcoins are going to pop, because it's the same strategy, right? Fortunately, if you're looking at blue chip stocks like Apple, Twitter, Google, I'm not going to teach you how to flip those. I don't know when to buy low and sell high for those types of stocks because, to be honest, those stocks depend on their actual fundamentals, meaning how is the company actually running. You have you have thousands of professionals at Goldman Sachs, JP Morgan, with hundreds of millions, if not billions of dollars under management that they have at their disposal to put into those stocks like Apple, Twitter, Facebook, Netflix, right? The FANG stocks. What I can show you though is how to utilize the imperfection of weaker markets like cryptocurrency market, the stock market outside of those huge stocks, right? Real estate. We work on the imperfection of the market because of investors like you and I, and show you how the market psychology works so you can make this profit, right? Nano was predictable. Nano, we made money in because it felt this pattern, and this pattern hasn't changed over the last 5-10 years, right? And people have been teaching these patterns way before me. I'm relatively young in the game, but there's people in their 60s and 70s now that have been able to analyze these trends in the stock market and have written books and videos and everything about that from 50 years ago, right? The same market psychology applies of the market. So I want to teach you guys that here. So I want to talk about this one. I think it's pretty much trending right now. I don't know why, but let's find out. It's called Encash, Nucleus Vision. Sub penny, meaning not less than 1 penny, but 3 cents. It's down right now. But I just want to talk to you guys about how to analyze it and what kind of factors to look at. Okay, so I look at two key strategies for basic investing. There's technical and fundamental. Technical applies to reading the graph. Fundamental applies to understanding the website and the white paper and the press going on around the cryptocurrency. And then the third one, which is more complicated, that I'm not going to get into this video, that's currency analysis. That has to do with the differential between Bitcoin and the investment I'm looking at. But that's a little bit of a higher level concept. So let's focus on the basics right now. So the support and resistance of technical analysis, right? So the website I use is coinmarketcap.com. And if you ever are interested in any type of cryptocurrency, let's quickly run through how you would want to analyze it. So first, important thing to look at, volume. Anything over $20 million in USD, 50 million, that is a safe investment in terms of liquidity. Now, liquidity is the ability to buy and sell and get out of a trade quickly. All right. Now, I don't want to spend too much time on this because I have a lot on my mind, but the higher the volume, the faster and more confident you can be that when you put in a buy order or you put in a sell order, that your order is going to be filled at the price that you set it at. The reason for this is because that means there's active traders buying and selling, wanting the cryptocurrency, selling the cryptocurrency, and this principle also applies to the stock market. Okay? So what we're going to look at here, what I like to do initially right off the bat is start establishing levels of support and resistance. Usually you'll see, besides like hypernova stocks that go crazy or some kind of exception to the rule, you'll usually see that there's general ranges of pricing that a stock runs between. So here we can see that the lower end of this is about 3 cents or 0.034, and the higher end is 0.04. So automatically, this is probably a stock that I would stay away from because it's too low of a range, right? There's only a 1 penny difference in terms of the profit that I can make. Now, again, if you put in $10,000 and that one, if it goes from 3 cents to 4 cents, you make a good amount of money. And let's just run that real quick. Let's see how. I want to show you guys how you can quickly do the math too. So $10,000. Oh, know 10,000 is a lot. I wouldn't go. Let's say $3,000, and you buy it for 3 cents. So you have 100,000 shares, and now if it went up 1 cent, you'll make $1,000. So it looks like on $3,000 making $1,000 is amazing, right? That's almost 33% or 133% return on your money. So that's pretty good. But you can now understand, okay, 3 and 4 cents is generally the range, right? Ever since the stock, oh, sorry about that. Ever since the stock has even been trading, okay? So next thing I like to do is, again, first step, volume. Second step, setting the support and resistance. Now we're going to continue with the technical analysis, but we're going to move into a more granular aspect of the timeline, okay? Because we're going to be trading this actively, you want to take a look at making sure, what has it been recently in the last month. Same situation. The low has been 0.035, right? And the high has been 0.04. So again, my the more I see these consistencies, the more confident I get in this currency, right? So now there's a lot of investments you can make, so you don't have to put money in this, but I would feel confident that if you put it in 3 cents, it might slowly go up. Again, I could be wrong. We need to do a lot more analysis, but that's what we can conclude from this technical analysis. The whole goal of this part of the analysis is to create these imaginary barriers of support, which is the lowest it goes, and resistance, which is the highest it goes, right? You want to create these, if I was to actually create lines on the screen, I would put lines across at the bottom so I know the lowest it goes to, and I would put lines across the top where the ceiling of where this price could go. That way you understand the game that you're playing in. You understand how much potential money or profit margin there is involved in a trade. Okay? So for me personally, a 1 cent spread, 3 cents, 4 cents definitely isn't enough. And I don't like to trade anything below like 50 cents, right? The only time I've made money off of that is Tron, Ripple. I guess in the crypto markets it can work, but again, I'm playing a statistics game. What I mean by that is I try to set up all of the factors of success in whatever way I can, and that's how you win, right? This is pretty much advanced or simplified almost, if you can say in a manner, like gambling, right? If you go to a casino, if you play poker, yeah, you can lose a lot of money, but you can also win a lot of money. And I'm teaching you how to do it right and how to avoid losing money and just having a statistical probability of winning. All right? Let me share an interesting fact with you before I go on to the next step of this. The top portfolio managers in the world, okay, they just have a win rate of, and so portfolio manager are the people like JP Morgan, Goldman Sachs, running these massive billion-dollar funds, picking stocks. Their average day is, okay, Apple we believe it's gonna go up, let's put money in it. And they're managing your money. They're managing the US government's pension plans, the teachers' funds, right? These people are responsible for pretty much managing and investing the money of the world, billions of dollars. The most successful ones only have a win rate of about 50% or 53%. What that means is that half the stocks that they pick are wrong. So you could almost flip a coin and be just as successful as a portfolio manager. But the reason it's important is because they know how to cut their losses immediately. They avoid losing money. If you're not losing any money, right, and you go all in on the bets that you win, and you make a lot of profit on the stocks that go in the way you want, how can you lose? There's no losing there, right? The biggest issue that people have is that when the stock position or the cryptocurrency position is not going their way, they're hoping and holding, right? Cut your losses right away and hold on to your winners to make it big. All right. Hope you guys enjoyed this video. In the next one, I'm going to go into the fundamental analysis and really understanding the website, the white paper, and the news that affects cryptocurrencies. So I'll see you guys there.